Good day, this is HoloFX. We are about to start our lesson on market structure. How do we identify market structure in the markets? Well, the market moves in three typical major directions. We have an uptrending market with a series of low to high to higher highs, and we have downtrend market, which the market is doing the opposite of an uptrend market, is creating new lows and violating um, lower highs, you know. Then we have a sideways market, which is a consolidation market where roughly the market is moving sideways. Okay, along that we have something called impulse and correctives. An impulse is the market moving in a general direction, which, let's say we are in uptrend, we are looking, the impulse is buys, the correction is sells, right? So let me go in the charts and look for what we have, an impulse and correction, right? So for example, let's start on a bullish market, right? A bullish market, we can clearly identify that here the market was in a bull trend, right? By what? By actually noting the lows. From the low, that the market, as you can see, the market formed a low, right? Created a high, then a new low, just a proper low, created a new high because this high was broken right here. Now, something that you need to be well aware of, that the market now created something called a lower high, because now this low is higher. I mean, this low is low and this low is higher. Then we broke structure, becomes a higher high. Now check this one out. This is a lower high. From lower high, higher high. Within here, we have an impulse, we have a correction, we have an impulse, we have another correction, then we have a correction sideways to a big impulse, breaking these stops over here to the upside. Then we have a deeper correction coming to a previous known order block to the upside, creating a new high. Mind you, whenever we violate a specific high, we create new highs, we need to fall back in a correction mode, right? High violated, which is this one, violated, creating a new lower high. As you can clearly see that the highs are the lows are ascending now, right? The lows are ascending, right? The low is ascending every time the lows are ascending, right? And every time structure is being broken, right? You can clearly see that, right? This is what we call an uptrend, and within the uptrend we have impulse and corrective modes in the market. Right? So this is a typical uptrend, right? Now let's get into a downtrend, right? How do we identify downtrend? We identify downtrend by actually seeing that the market, which created a high here, right? The high now, this low is violated, right? Then the market retraces, right? But check now what's happening. We have a low. We failed to make a new high, creating a lower low, lower high, lower low, lower high, lower low, right? Then, mind you, this was a bit of a sideways market. Sideways market. Then from here, we had a high coming back to this zone over here. We'll touch upon that later on. Then the market broke structure, right? Created a new lower high, lower low, 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 lower high, right? And so forth. That's a downtrend market. So, what is a sideways market? This is a sideways market when the market is moving in a sideways direction. We have no clear direction. The market is stuck in a consolidation. Sometimes the consolidation can be tricky, like for example here. The market was stuck in this range, stuck in this range. The market was stuck in a range. Likewise here, the market was stuck in a range. You see. So that's how we identify the three phases of market movements. We have a uptrend, which is this side. We have a consolidation, mind you, on a larger scale. This is our consolidation zone on a larger scale. On a larger scale, the market was in a consolidation zone. Here you can see that. It's been buying, now it's selling. You can clearly see that, right? Turn to back to an order block, started selling from there. Okay, guys. Now let's touch upon what are point of interest and order blocks. So I'll start on a monthly chart, right? So on a monthly chart, what is an order block? An order block is an institutional candle that is the source of either a buying power or a selling power in the market. What do I mean by that? I mean to say that this is an institutional candlestick. This candlestick is the candlestick that the institutions place their orders in order for them to have sales in the market. They would rather first buy the market, get people to take the opposite side of the trade, which is taking buys. They want people to climb on in this buy while they are hedging their positions, taking sell orders right in this candle. Then what happens when they fulfill their objections and see that, okay, we have enough orders taking the buys, we now have to sell the market. Now these people are very clever, whereas they have had a hedge, meaning they're buying and selling at the same time. On this hedge, they would want to exit as high as possible for them not to make a loss, for them not to make a loss, for them not to incur a loss. So I would want you to notice that, look at where price is on the 78.2 zone, meaning that above here, it's when they take their profits for the buys, and leave their sell orders, then they're in deep profits. Likewise here, they add more buys, add more buys, add more buys, add more buys. At the same time, they have sell orders that they do as well. Likewise, as retail traders, we would want to, okay, go with the momentum. We add buys, we add buys, we add buys. Oops, then boom, they take it lower. We think, oh, we're getting out, we're getting out, we're getting out. We add more buys, we add more buys. Then we end up being margin called while they are in a deep, deep profits from sales from here and from here. You see? So that's a order block. Let's go on a weekly. So what is an order block? I would define an order block as a last up candle within an uptrend. It's so easy, right? So easy, so easy, so easy. So how do I put this? This is the last up candle. So when price returns to it in future, we will have sell opportunities, right? Likewise, here we have a last up candle. When price return to it, we sell. I like using an up candle that has a body, a big body. I wouldn't use this one. I wouldn't use this doji candle because it's less likely for price to return to it. I would love to have a candle that has a big body. Likewise here, this candle has a big body. As you can see, last up candle for a sell, failed to reach it. But this time it did. Mind you that what we had, that market structure, we still have it over here. What we had, that market structure, we still have it over here. Right, guys, go down in the lower time frame, show you more order blocks. Now this is beautiful, this is beautiful. And one thing about an order block, if we have wicks above it, I would love also to cater for the wick as well. See this wick above, that's where I would cater for it. The wick above as well, I would cater for it. I would add it as long as my order block as well. Look at the direction we had. We've had around about 40,000 pips or so, 42,000 pips, even more. Okay, guys, so how do we trade actually? How do we trade using this information that we have? For example, okay, let's say we want to be a buyer, right? So what we will do is we'll look at the market structure. We have a low, we have a high, we have a new low, but it's higher than the previous low. We have a high, right? So let's assume Let's assume that there is nothing over here that the market is selling, right? The market is in the sell, right? So from here, I would say, okay, since we had a low here, created an order block to the left side, filled imbalance, order block to the left side. I would say that also here we have an order block, right? I would say that we also have an order block right here. Then when price hit this low, the high of this low, the high of this candle, I meant to say, when price hits the high of this candle, we will look for buy opportunities in the market. What do I mean by that? I would say, okay, I would aim to take my profits above here, right? That's where I would aim to take my profits. Let me get a bit color that we can all see, mint green. Yeah, that's where I would aim to take my profits. I have a stop loss around here. Look for a bit of red color, lavish flush. So I would aim to have my stop loss here. This is my risk. Then boom, would you look at that? Let me make it so we can all see this color. I need you. Yeah. So when the market came at the zone, we had a big profit taking. Well, the market didn't quite get up to it as yet. This is our target though. Last down candle as well here. We have a secondary entry. Boom. We both had the targets hit. Target one. We had a bit of a deep retracement, trying to scare people away, which was also a secondary entry. Could have had an entry right here and a secondary entry right here. Take it up. Now, mind you that the market has broken this structure now. Change this color, make it purple, blue violet. That the market has broken now the structure. As you can see here, it's trading above it. Whenever we come here to this point, we're looking for buy opportunities, right? Let me show you what I mean. Whenever we're here, we look for buys. Look for buys now. Change the color. Make it gazebo. Gainsborough, I meant to say Gainsborough. Whenever we're at this zone, we're looking for buy opportunities now. Whenever at this level, we look for buys. Hit a first buy. which it created a high right here, right? That is our new level that we look to buy into. First level objective, second level objective, right? So here, this was our clear buying opportunity, because as you can see here, we had a down candle. Whenever we came here, we looked for buys, aiming take out this high, honeydew. So the market did as planned. Took 1 2 3 days to achieve the objective. See, and we had little to no drawdown ever since we entered here. Took it long. Mind you, from here to here, you can see the market scooped down to a 78.2 zone. 78.2 zone. Seventy-eight two zone. Okay, ladies and gentlemen, I showed you how we trade within an uptrend, right? Using what we call an order block, right? I hope you understood that. Well, an order block is the last down candles here. It caused a big up move. Like for example here, caused a big up move. Let me just look for insert objects, shapes, ellipse. See this move from here to here, from here to here. This whole move was caused by this down candle. It was a bit erratic, but it was caused by this down move. Then when price came to it again, so when we buy. You see, now as you can see, the market changed structures for a while now, because now this whole lows it got violated by this swing movement here. Let me show you which type of swing. This one, it violated these lows. Since we had a violation of lows, we know for the last up candle of this move, which is this one, will be our new order block. You can take this one though, since I refer to say that I really do not like entering the market on wicks, on like a doji candles, even hammers. I don't like a hammer order block. Then you can see that the market, since it tapped here, since it broke these lows, now the market tapped into the order block. You're looking for sell opportunities now, right? Looking for sell opportunities. Because now we broke here, we broke structures where we are in a downtrend. We're clearly in a downtrend now. We Most of the time I wouldn't take this move because it's too early for me to tell, to actually notice the market because most of the time I would say, hey, we're still in an uptrend. I see this, I'm taking it long, then I get stopped out, right? So that's why I wouldn't take it. I would see that the market has shifted, right? I would notice that the market has shifted. I would watch it sell, watch it consolidate, watch it push down again. Then that's when I'm clear, because I would love to see, okay, we had the first drive, second drive. Now I take it on the third drive. What do I mean by first drive, second drive, third drive? I meant to say the first sell that caused the origin of the change of the structures, the second sell to confirm that we are in a downtrend, then the final one, that's when I will take my bullets and shoot and make money. I would enter this position right here. I would enter this sell, knowing that, okay, look at this. And most of the time, mind you, I would aim for this order block here, this last down candle. That's what I would aim for. That's what my profit objective would be. Because of I'm in the order block right here, right? I know in future, when it comes in future, hypothetically speaking, for argument's sake, there was nothing right here. There's nothing right here, right? Uh, there's nothing right there, right? Then boom, that's when I'm in a trade. So fail to hit my take profit, I retrace. And mind you, when I'm in a retracement like this, I know that for sure this will be my point of interest when price comes to it. So I look for sales. Yeah, boom. What I say, what I say. You could also say, okay, since we're here, look for sell opportunities to the downside as well. Change the color, honeydew. Look for honeydew. Change the color as well, look for honeydew. Honeydew. Perfect. Then boom, we hit our target. We hit our targets. We had the first sell from here. We had a second confirmation sell from here. The market does this thing. So I hope you got it. I hope you got it. So one thing I've noticed about the charts is that you need to be very specific and very patient, because all in all, look at the time. We've had no trade since the 14th till the 26th of February. That's when we started having a trade, the 26th of February. We've been looking at the market, we've been analyzing the market, but we haven't had a trade, we haven't had any action yet. That's my strategy. That's my strategy for you. Being specific and highly accurate in your analysis is very key. Right, guys. That was the lesson for the order block and the market structure.